Chipotle is defying economic uncertainty and soaring to new heights. The stock has skyrocketed nearly 24% since the beginning of the year, which has many investors wondering, is it time to hold the red chili salsa, or should we in fact add some of that chile de arbol to really crank up the heat? One hot topic has been their investment in cutting-edge robotics, and some might think this is an attempt to replace their current employees, leaving them jobless. Yet they just announced plans to hire 15,000 new employees. So how are they pulling this off amidst concerns of a looming recession? Well, in today's video, I'm going to uncover just that and let you know why I think Chipotle is still worth a whole lot more compared to its fast food counterparts. Coming into earnings this week on Tuesday after hours, Chipotle is expected to come in with expected earnings per share of $8.89 and $2.23 billion in revenue for the fourth quarter of 2022, and analysts are practically split on where the company should be valued from here. With a forward PE of 50 times next year's earnings, it's easy to see why the knee-jerk reaction from many may be to turn and run, but take a look at what Wells Fargo had to say about them just 1 week ago. They believe that Chipotle's best-in-class unit economics and ample growth drivers make it a strong investment opportunity. The firm sees Chipotle as a core long-term holding for large-cap growth investors, and I couldn't agree more. Analysts at Wells Fargo highlight Chipotle's top-tier economics, a range of tools for boosting comparable sales growth, and increasing shareholder returns through buyback. They predict a stable growth algorithm in the coming years, driven by a combination of moderate comps growth and new unit expansion. While valuation is seen as a cautionary factor, the stock is still trading below historical levels on that valuation. Not to mention, revenue growth from the restaurant chain is at nearly 17% year over year, while comparing that to something like McDonald's that didn't grow at all. The company is truly best in class and doesn't appear to be slowing down anytime soon. Not only that, but amid widespread job cuts across the economy, Chipotle Mexican Grill is bucking this trend and plans to hire 15,000 new employees. The company is gearing up for what it calls burrito season, the period of higher demand from March to May, and this move is in line with Chipotle's ambitious expansion plans to double its North American footprint to 7,000 stores. Despite the bleak economic outlook and concerns of a recession, the restaurant chain is confident in its growth prospects and is investing in its workforce to support this expansion plan. This move is a stark contrast to the layoffs across various industries, including tech, chemicals, and manufacturing. Workers in the retail and restaurant sectors have been insulated from the job cuts so far as companies struggle to attract and retain talent. This shortage of staff makes it less likely that retailers will be cutting significant portions of their frontline workers in the near future. Retail giants such as Walmart and Starbucks have actually been raising starting wages and investing in their workforce to compete for labor. The latest government report on GDP shows that people are still out there spending, with real GDP increasing by 2.9% in the fourth quarter of 2022. Consumer demand has remained fairly resilient, particularly in services such as travel, services, and accommodation. Chipotle is poised to benefit from this trend, and consumers prioritize spending on experiences over goods. Industry experts predict that any potential layoffs in retail will be concentrated at the corporate level or in sectors that have been hard hit by shifts in consumer behavior. Chipotle's bold move to hire more employees shows its confidence in its growth prospects and its commitment to supporting its expansion plans, which brings me to my next point. The creators of Flippy, the robot arm that cooked hamburgers, now brings you to Chippy, a robot system for deep frying and seasoning tortilla chips. Miso Robotics has teamed up with Chipotle to develop this technology. The system is currently undergoing testing at Chipotle's Cultivate Center Food Lab and is expected to be rolled out into one of its California locations. Chipotle's VP explains that Chippy has been extensively trained to maintain the same product quality that Chipotle's guests have come to expect, with its subtle variations in flavor. I can only imagine where this goes from here. Are we looking at perhaps Trippy, the Wii concierge robot? The use of robots in the fast food industry is being touted as a solution to ease the burden of tedious tasks on workers and allow them to focus more on the customer interaction. However, there are concerns about how many jobs could potentially be replaced by automation, with estimates suggesting that up to 82% of restaurant positions could be impacted. On the flip side, no pun intended, automation could have potentially saved fast food restaurants in the U.S. over $12 billion in annual wages. The restaurant industry is already facing challenges in finding enough workers, with a 4.6% decline in jobs since pre-pandemic levels. Miso charges restaurants around $3,500 a month for Flippy 2 and an additional fee of $10,000 for installation. This may seem costly, but when compared to median hourly wage of fast food workers in the US, which is around $12.07, the cost could be well worth it for restaurants. Flippy 2 is designed to work around the clock and does not call in sick, making it a reliable solution for 24-hour locations. The robot takes about 6 weeks to manufacture and costs around $15,000 each. Miso has raised over $70 million in crowdfunding and has announced that it is testing a robot that fries chicken wings for WingZone. The company also offers a streamlined version of Flippy 2 called Flippy Lights, which is also currently being tested by Chipotle, as well as a drinks dispenser named Sippy. Okay, so let's take a quick look at the chart to determine some possibilities for Chipotle's stock price. So here we have the weekly chart on Chipotle, and I have a couple areas of support and resistance marked, but I particularly want to take a look at this one right here, up around $1,753 per share. We haven't seen it at these levels since September of 22, and then again over in December of 21. So, as I had mentioned before, the premium on this, the forward PE, of course, is expensive, but given the growth trajectory here and what they're actually doing as far as innovating is concerned and the plans to double their footprint here of 7,000 stores, I would imagine the growth here is worth paying the premium. 17% year over year growth, it's unheard of in this industry, particularly for a company that's been around this long. So in my opinion, I think Chipotle actually looks like a pretty decent setup. Watch for on these earnings for this break over that 1750 mark. That's going to be a surefire resistance. If by some chance Chipotle actually ends up disappointing on earnings, then I think that this area of support around 1523 does come into play. So keep an eye on these two areas. Again, well above the 50-week and the 200-week moving average. So there's no mistaking that this is actually a pretty hot stock right now. But nevertheless, I like it, and I think that there's lots of potential here regardless. The fast food industry is a massive global business worth $273 billion, with over 280,000 fast food restaurants in the US alone. With this fast-paced nature of the industry, the use of robots like Flippy 2 could potentially revolutionize the way fast food restaurants operate. While the impact on workers remains to be seen, the economics of automation are very compelling. Regardless of economic conditions, they are continuing to make plans to double their market share. They're growing their revenue at 17% year over year and are investing in automation and AI in order to cut costs and make them even more efficient. The premium for Chipotle is worth it to me, but let me know what you guys think in the comments below. Are you planning on beating the heat on this Mexican restaurant chain, or is it time to pour cold water over all of it? And be sure to tune in live tomorrow at 3:45 p.m. Eastern Time, as I will be reacting to these earnings. You're not going to miss it, so make sure you're hitting that notification bell to get notified when I do go live. Until then, stay safe, and I'll see you tomorrow.